On this episode, we're joined by Richard Dana, who is the co-founder and CEO of the fintech startup Tembo Money. So today we're going to discuss their mission to transform later life and family lending, how they've built their products, and their vision for the future of the UK mortgage market. So Richard, firstly, thank you for joining us today. For those that aren't familiar with Tembo Money as a company, can you give us an intro into what the company does?
Yeah, so Tembo Money is aiming to help families manage their money more effectively together as a family. So we're taking inspiration from what ultra high net worths do through family offices, and we want to build a platform that allows every family to manage their finances sort of more savvily as a family together. And we started off with home buying. That's our first kind of area, and we've launched as a digital broker, focusing on alternative ways to fund the bank of mum and dad for first time buyers.
So before we dive into that in a bit more depth, I'm always interested to hear the origin stories of companies and how they're founded. And I understand you, a bit of an interesting one, because you founded around a year ago with all the events of the last year. That must have been quite interesting in itself. So how did you come to co-found Tembo Money?
Yeah, so I started off my career in corporate restructuring, so helping lenders when things had gone a bit bad with their loans. Worked at Ernst & Young and then joined a client, Thomas Cook, and then left Thomas Cook to set up my own travel business. So I had a travel business for 4 years, which I sold, and then I joined a venture capital company where I was CFO. And they've actually they were our first investor into Tembo. But I was there for 4 years, and we were surrounded by these amazingly innovative businesses. You know, we had 200 businesses in the portfolio doing incredible stuff across all these different sectors. But what struck me was, despite all the innovation, actually, you know, property, having a home, we're kind of going backwards a bit on it. You know, there are half the number of first-time buyers this year, in the last sort of 5 years on average, than there were 25 years ago. But also for renters, you know, there's growing insecurity around, you know, being kicked out. So the idea of Tembo is to try and help solve that, or be part of that solution to have more security around home ownership.
So was this an idea that kind of came to you, one afternoon sitting in the garden, or how did you come to?
No, I was always really interested in the inequality in wealth between generations. Right. Quite a random thing to be interested in, but it just looks like, you know, you hear a lot about inequality amongst other areas, but actually this is really different because there's not a lot of animosity between the generations. Yes. But there is just this big imbalance. 75% of property wealth is owned by people over 55, but 80% of the population is under 55. So you've got this big imbalance. And actually, you know, we're trying to work out ways to try and smooth that balance a little bit more, so that you can help younger people have access to capital actually when they need it. Yes.
And I guess with all the asset price inflation of the last 10 years or so, none of that's not actually very liquid for older generations.
Exactly.
So I guess there's a lot of companies, or a number of companies, approaching this from different angles of how you can kind of unlock that to perhaps help the younger generation.
Yeah, and I think it's worth just touching on, you know, if you look at the equity release market, that's actually still a very niche market. It's 4 billion of lending amongst 1.8 trillion of property. Yes. And I think, you know, they've obviously had some reputational issues with scandals in the past kind of 20, 30 years, but actually the products haven't changed that much. There's been some innovations to the core lifetime mortgage product, but actually a whole variety of more flexible products to allow people to borrow into later life. I think that's where the opportunity is.
So again, before we sort of dive into the product in more detail, you founded and started this company remotely. So you must have done, right? How was that? Like setting up a team remotely? And
I remember at the beginning of the pandemic, I sort of thought to myself, I would never be able to hire someone without meeting them in person.
Yes.
And roll forward, you know, whatever it is, a year and a half, and I've hired 20 people, all remotely. We actually met I'm quite tall. We met the team about, you know, for the first time about 6 or 9 months ago, and they were like, "Wow, we all thought you were really short." That's really weird. So we have this kind of weird dynamic. But it's been you kind of get used to it, doesn't it? But I think in terms of the sector we're in, it's actually really helped advance things quite a bit in terms of pushing people online. And, you know, still a lot of mortgage applications and that in that area were being done in person, or, you know, that's really driven that forward. Whether it will go back, I don't know. But I think it's had benefits.
I agree. Cool. So in terms of the product then, so can you break it down in a bit more sort of detail, how your services and product work, and how you built out the technology around that?
Yeah. So we're trying to bridge the affordability gap, for people buying a house. So that can either be the amount they earn, means they can't quite borrow enough to afford the house they want, or they haven't been able to save up a big enough deposit, right? So those are kind of the two areas. I think it's worth just touching in terms of the problem. I've already mentioned this imbalance in wealth, but also, you know, Help to Buy, which has been funding between 20 and 40% of a lot of first-time buyers' home ownership. That's coming to an end. Or if it doesn't come to an end this year and they roll it, it will come to an end at some point. So there's this kind of issue where people are struggling to afford to buy a home. And what we're also finding is that a lot of people are actually paying more in rent than they would be if they were having a mortgage. So the kind of monthly repayments, obviously there's like stress testing on it, but there is an issue there in terms of people not being able to afford to make that first jump. We already know the Bank of Mum and Dad is massive business. I think it's like the 6th or 7th lender if it was a mortgage lender. But the issue is that's really just for kind of about a third of the population. So people whose families are wealthy enough just to have some cash and hand it over, right? That means there's 2/3 of the people that don't have access to that. So our kind of core market, we do help some of the wealthy people as well, but our core market is this middle third of people whose family might own a home or they might have a pension, but they don't have that available cash that they want to just hand over because they might be worried about their future to their children. So we're trying to help people find alternative ways for their families and willing close family friends to fund the Bank of Mum and Dad. And broadly speaking, there are 2 key ways. The first way is through what we call the deposit boost. So this is using an alternative later life product to unlock a bit of money from a family member's house, which is then transferred over, and that can fund the deposit. The other way is if the family member doesn't own a home, or if they don't want to take money out of their home, they can add themselves onto the mortgage as a joint borrower. So joint borrower sole proprietors. That's our kind of income boost type product where we are focusing on trying to increase the affordability of first-time buyers. So that's the kind of the 2 areas we're focusing on. We're actually just about to launch a third area, which is for the third of people who have no one who could help them. And this is looking at all the kind of alternative propositions that are starting to emerge, what I'd call like private help to buy schemes. So that's kind of a bit later on for next year. So the way it works is someone will come onto we're currently direct to consumer, but we are launching a B2B platform. We're partnering with some lenders to actually power their lending online, but we're also distributing it through IFAs and actually through mortgage advisors and mortgage networks. But they will come onto our website if it's direct to consumer, and they'll fill in some information about themselves and about a willing family member. And then we will use our optimization algorithms to work out what is actually the best buying structure for them, given what we know, right? They can then go into our platform and play around with the plan. They can add in different boosters. They can share it with their families. And I think that's really important because, the normal home buying process for a first time buyer is 3 or 4 months. Actually, what we're finding is it's a really long process to discuss it and get family members' heads right over it. So probably like 5 or 6 months. And we see people really engaging with all the tools we've got on the platform to actually kind of play around with how they could help and what kind of house they might be able to buy. So that's that element. And then the next element is they then fill in our fact find and we can then book them in with one of our advisors. So we have a team of 5 advisors already really experienced. And what we've found is actually both for our company, learning about what our customers want, but also, the key decision maker here is the parent or the family member. They often really want to speak to someone on the phone as well. So that's a really key part of our process, and something that we're really, really focused on. And then I guess the final element is, we will then arrange the loans. We're a broker, so we'll go to lenders and we'll arrange the loans for them.
Cool. So there's quite a lot of this. I guess the first thing is part of your product then, or your user journey is also, there's like an education piece, isn't it? It's quite a different, even though some of these products might have existed for quite a while, as you sort of alluded to, the knowledge perhaps isn't out there in terms of, explaining this product, and it takes a bit longer. So you've used digital tools to enable education as well and self-service around building building up kind of illustration of what it could look like for me. Is that right?
Exactly. Yeah. And I think that what you sort of hit the nail on the head there. People often think, why have I not heard of this before? And is it too good to be true?
Is it a scam?
Is it a scam? Because it's like, one simple, we're focused, and I've really just talked now about the affordability, but actually one of our really strong user cases is, even if the buyer can afford the house, right? If you've got a 5% deposit, right? If you borrow exactly the same amount, but you put a little bit against a family member's home, and then you have an 80% loan rather than a 5%, 5% rather than 20% deposit, you can actually save about 40 to 50% in interest costs over the first 5 years. So people are like, why didn't I know about that before? So education is a really key bit. And we've found that direct to consumer, we've had really good traction, we've had really good interest. We've got like 400 or 500 people in the process. But we're actually finding that it needs to be explained, we think, more by third parties. So that's why we're partnering with IFAs. And for them, there's a really strong rationale, because they get people coming to them saying, I want to draw down some money for the Bank of Mum and Dad for my investments. Can you take it out for me? Obviously, the IFA is kind of keen to keep assets under management. And so this is a really great alternative for IFAs to be able to fund that kind of Bank of Mum and Dad activity.
And I think you said that you partner with some lenders as well, and you're kind of powering their. Can you sort of give a bit more detail on that?
Yeah, so we've done a couple of lenders. We haven't launched it yet, but it's kind of been piloted and it's going live in January. But one of the really big mortgage lenders in the UK, they obviously really focused on helping first-time buyers, but also with an eye on what's happening with Help to Buy.
Yes.
And so we are helping them bring together their later life products and also their first-time buyer products on a white label platform. So people that fail a dip,
yes,
not for credit, but for affordability, they then get pushed through our journey.
Yeah.
And that allows this lender to then couple up just their own products, but like, here's a first time buyer loan. And if your family member put in 50 grand using a Rio or something, then that kind of, helps
Interesting.
them. Interesting. And that application can be used, not just with lenders. It could be used around pension drawdown. Often people drawing down their tax-free amount, they would use Bank of Mum and Dad. So there's loads and loads of applications where we are looking to partner.
Okay, interesting. So from a technology point of view then, can you sort of paint the picture on how you've built this out in the last year?
Yeah, so I'm not a technologist. I am an accountant. Okay. But I've got an amazing CTO, a guy called Jeff. He was at Babylon Health, and then a chief product officer who was at Mojo Mortgages. So they kind of brought with them a bit of mortgage industry knowledge, but also more deep tech knowledge. And I guess, we've started off by having an in-house tech team. So I think that's quite important. And what we've done is we've really focused all of our building and our product around the consumers. So we are in a beneficial place where we have to speak to our customers.
Yes.
So that means we've spoken to 2,000 families. Yeah. And we've also spoken to more people in kind of forums, but we've spoken to people who are really in the market. So we've really shaped our product design around user insights. I guess the second thing is we've looked around to see what platforms we can use without having to rebuild. So we started off with the CRM. We've actually built our own kind of CRM because it wasn't quite bespoke enough.
Interesting. Okay.
Sourcing, we've used, 27 Tech, but actually for the more niche products like JBSPs and Rios, we've had to sort of build our own sourcing. So we've kind of used bits and then bolted bits on. Yeah. And then the kind of core bit of technology that we've built is this optimization algorithm. So kind of working out what is it that is the best structure for the family, depending on what they want. So if they want to save interest, it's this. If they want to just increase the amount they can borrow, it's this. If they want to de-risk, it's this. So that's kind of the key bit of tech that we've built. Okay. And we've also, spent a lot of money on our user experience. It's inherently a really complex product. Mortgages are already complex, and first-time buyers haven't done them before by their nature. Yes. And there's also this kind of underlying suspicion around later life lending. So we've had to have a very seamless user experience, which is obviously still in progress. Yeah. But we've also had a kind of robust technology underneath. Interesting. So I'd imagine you've done a fair amount of usability testing as you're building the product with users, etc. Yeah. It's interesting actually in terms of the kind of modular kind of build that you've taken. So although you've built your own CRM now, right? But you're using kind of modular sourcing platforms where you can. This sort of stuff wasn't really possible sort of 15, 20 years ago. There's so much out in the market, and given that, APIs and stuff enable different systems to talk to one another, it's quite sort of interesting to see how quickly you can spin up a new platform. Yeah, well, we basically, we had an API right from the beginning, so it's really helped us to build partnerships as well. Yes. So both fit in and out into our, so we have a kind of our own CRM. We then use, Acre, which is like the mortgage actual CRM we use for the mortgages. Okay. We have a kind of CRM that sits on top of that. That manages all our kind of broader activity. And, it's hard if you have 3 or 4 people on a mortgage. A lot of the CRMs aren't geared up for that. Yes. So there's kind of lots of niche stuff that we're kind of working on. Where there isn't a solution to it ourselves. But we're definitely of the view, if it exists, let's not be proud. Let's just take it in. I'm totally surprised you described your optimization engine. Most startups would say, machine learning, AI driven, etc. That's so obviously well, I mean, obviously you got all that, but like people just glaze over when you say that. Everyone says it. And I worked at Founders, the investor place, and we had 200 investments in every single deck. It's like AI, whatever. And then you're basically like, it's a spreadsheet in the back. So it's smart, it's really clever. Yes. But it is, optimization technology. Yes. I can drop the AI, I think. And sort of follow that through then. So I noticed on your site, you talk, about the real value of speaking to a real human being. I think it even says a real human being. I'd be quite interested in kind of how you see that balance between kind of a digital journey and that human element of human advice, and how you kind of balance that at the moment. Yeah. So we went to our first sort of route to market was targeting the first time buyers. So we felt they had the most to gain from it, but also they were the most easily accessible for a digital approach. So we targeted there, and the idea with the first time buyer, we then introduced the concept to the family member. But actually, that's worked. But actually what we've realized is there's a big drop off when this complex solution is not really being sold properly to the family member. So we're now broadening that out and speaking to the family member. And what we found from speaking to them is, whilst, people in their 50s and 60s are really digitally savvy, actually they do want to have a phone number. And when we've put on a phone number onto a website, for example, that's just increased conversion. So having that, even if people aren't ringing the number, having the knowledge that there is a group of people sitting there and it's not some scam really helps. But also, it's a really complex product. So you can't book an appointment to speak to someone unless you've spent, 15 or 25 minutes probably actually engaging on the site. So you need to fill in quite a lot of information. You need to create a plan. You need to have, started your fact find. We don't do any soft credit searches or anything. So there's not that commitment, and we don't charge the fee to speak to the advisor. But you need to have shown engagement. So we don't just want people ringing up and, doing the whole thing on the phone. But actually, I think often the advisor call is like really, really critical, apart from it being a regulatory requirement. It's really, really critical, to, kind of give the confidence that's needed. And often you have questions that the tech just hasn't quite caught up with. Because there's so many, edge cases, aren't there? So I think there will always be a call there. I think it's such a fundamental decision. This is not someone just buying a house on their own. They're actually looping in their family as well. You're talking about pensions, family homes, all this stuff. I think it would be it's going to be a long way off. And where that could be pure digital. And we sort of think it's really important. I think the other element is around safeguarding. So, there is obviously a risk here that there could be some persuasion between family members to make things people do. So we want to make sure we're speaking to each family member separately. And so we're ensuring and we're asking them questions to ensure that we're comfortable that, a child isn't saying, hey, I want the money, give it to me, or else. So it's kind of, that is, it's really important. So I think the call will always be there, but actually there's so much other stuff that can be automated, particularly on the back end. There's so much paperwork going around, still. And, given that we're dealing with quite a lot of small lenders, which is kind of, they are specialists. Actually, you're only in many ways as good as the level of the lender. Because if you're doing something and the lender is deciding to do their monthly, credit meeting with bits of paper, then that's your timeline you're on. But we can I think there's a lot of work to do to improve that efficiency.
Interesting. I guess to the point we were talking about earlier, the events of the last 18 months, 2 years or so, we do a lot of stuff with specialist lenders, and we've seen big advances in, they had to adapt to adopt
it's been good.
New technology. So hopefully that continues. So from a user journey point of view, are you utilizing things like sort of open banking lookups and, AVMs and digital ID? Is that
so digital ID, we're building in, open banking. I think, I've been on the board of like 5 or 6 of these fintech businesses that have used open banking. I think the uptake has not been that great. So I think it's getting better, but I'm not sure. So I wouldn't want to force people to do open banking. So, for affordability and stuff, and a lot of the lenders won't even accept it. We haven't relied on it, but I think we will build it in. So it's definitely something we want to do. And the vision is really to have this platform that allows people to effectively have their own private family bank. And when they're on that, then things like financial planning, we can use from open banking. So very like tools to help people do that. So, I think we will bring in open banking, but I'm kind of still waiting for it to kind of become more widespread, because you're going to basically have a 2-stream approach where you have to have a non-open banking journey and open banking, because you don't want to lose people just because of that.
I think I saw a press release from the Open Banking Foundation or 6 months or so that it was like, it's tripled over the last 18 months. You're like, well, that's great, but it's still from a fairly low base. But I do think that even from conversations with users who do our usability testing, it certainly is growing, knowledge of what open banking is and acceptance that this is secure. And kind of, if there's a benefit to the user of instant, affordability check based on actual data without having to do paper statements, certainly a certain advantage there.
It's something I've actually found really interesting. I know if you were doing a remortgage, then speed is really important. But this whole thing around speed, like we obviously try to be as quick as we can. And we're not slow. But given that the buying process, by the time you've done your conveyancing, takes about 12 weeks, I think there's other elements in terms of the quality of the output, for me, that are more important. Obviously, you need to have a great customer experience. But like getting the result within 24 hours to me, or 3 days, or whatever. I'm kind of like, is that important? Then given that you then need to wait for 12 weeks. Obviously it's nice to have, but I wouldn't say it's the kind of key burning issue.
Particularly a more complex product, I guess, as well. And that's a great point around conveyancing. So there's been a lot of, focus at that beginning of that journey, but it all typically, in terms of the mortgage life cycle, where does it fall down normally? It's normally around sort of conveyancing in terms of.
And we really struggle there because, do we want to recommend a conveyancing firm that even though they've done it last time, they might then trip it up and then we'll get, it's a really bad reflection on us. So there is loads of work to do in that whole area.
It's been interesting. I speak to a fair amount of people in the conveyancing world as well, and I think there is a growing recognition and ambition to quite, radically overhaul that process. Obviously, there's things that the government are helping with, for example, around digital ID. There's a set of standards now that Land Registry is saying, like and the Conveyancing Association is saying.
And they've announced some money in the budget, haven't they, to invest into digital conveyancing?
Yes. So I think the momentum seems to be building there as well. Yeah. Cool. So in terms of your platform then, so you've had a busy year then, it sounds like. You've
raised money as well, so that's always
so what's the deal there?
So we raised a seed round from led by Viva Ventures, and also an investment fund called Fair by Design. So that's backed by Nationwide and the Joseph Rowntree Foundation. They're an ethical investor. Okay. And I think they're really focused on this poverty premium. And it's really interesting because, if you are a homeowner over a 20-year period compared to a renter, you'd be on average about £180,000 better off based on the last 20 years.
Yes.
So there is like a growing recognition that actually trying to get people on the property ladder will help start accumulating wealth. Yeah. And actually the more that people don't do that, the gap between the people that have it and don't will just grow. So we're kind of focused on that. And also obviously there's the element of, if you can boost your deposit, you can get a lot of money off the interest rate. So it's been really great having them on board.
Yes. And I guess maybe not a topic for this podcast, but the wider societal benefits of people having a stake, and that kind of the distinction between the generations can have other negative effects. So I think certainly there's an argument, there's a greater good here as well.
Yeah.
So you've had quite a varied background, as you sort of alluded to at the beginning of this. You've come into the lending world. What most surprised you about the kind of, maybe from a technology point of view, or just generally the mortgage and lending world when you first came in?
Yeah, I think I had a travel business, so I think it's natural to like compare. Actually, there are some good comparisons. I think it's quite a small industry in terms of like it's quite a small network. Really, when you boil it down. So that's interesting. I think I would say travel is probably a few years ahead in terms of the technology. Obviously, they've got a less complex product. But in terms of kind of the back end and all the technology, I think the front end is starting to improve. You can see that particularly with like vanilla type products. And Habitat and stuff have done an amazing job there. But I would say that there's still the back end stuff. There's loads. And I think, a lot of the lenders have, had a pretty good time, I guess, with the mortgage lending, and you just see a lot of kind of legacy systems that make it quite hard to innovate quite quickly. But I actually think that creates a great opportunity for us because if we have an API, you can kind of circumnavigate their systems, and actually they can test stuff. What we found with our lenders so far is they can kind of test that stuff quite quickly, either via a white label or an API outside of these kind of core legacy systems. So I think, I was surprised that there was still like paper being shifted around, and when you're registering, we've just been directly authorised. When you're registering with all the lenders, it's all like paper forms you need to sign and everything. So there is still quite a bit of that, but I think it's moving in the right direction. I think the last 18 months, where certain products could only be sold in person, that's really pushed forward. And for me, whilst it's nice to be sold in person, obviously we wouldn't do that. Actually, if you've got calls recorded and stuff, it makes it much more secure. If you can have it in a position where you've got more control over the advice process. Yes.
And I guess particularly you said that you're working with more specialist lenders as well. Yeah. Has it almost perhaps been an advantage that they, maybe they're looking for kind of a white label solution?
Exactly.
Yes, there's an opportunity.
And I think, and they haven't needed to do it, but, if you look at the larger, the way the market is going, and there's such an opportunity here, there are a lot of different startups are sort of coming into the space. Whether or not they'll succeed or not, who knows?
Yes.
But it's starting to create that kind of challenge, I guess. And one of the big challenger banks, or you can see Starling's already going to mortgages, where they're going to start positioning, and their user experience will presumably be superior. So it's trying to like keep up with that game, and seeing how we can work with the lenders. Like we never wanted to be a lender; we always wanted to sit in the middle and provide the technology.
Yes.
But I think that's what I found.
It certainly feels like the last sort of couple of years, really, there's been a lot of focus and time and effort in trying to think about how you can reinvent the mortgage loan to make it better and faster. And it seems like it's, after a bit of a slow start, momentum is really building. So it'll be interesting to see what happens in the coming years, which I guess dovetails onto our final question for today, before we wrap up. Plans for 2022? What's on the horizon, and what's down the track?
Yeah, so more of the same, I guess. We've done a really great job in the last 9 months of our direct to consumer proposition. We just hired this great head of partnerships from Smart 365. who over the last couple of months has just been getting some incredible inbound in terms of partnerships. So, and we're kind of having a partnership strategy of white label, as we've already talked about. So we will white label our platform for lenders to use. And we've got some really great conversations going with some lenders, and we'll launch in January our first one. And then hopefully there'll be some more going on there. So that's a kind of pure technology type offering, but it's helping the lenders distribute these more niche products. And we're also building partnerships with advisors. So as you mentioned, education is the kind of key thing here. And so we will be partnering with them, to help them strategically with their business. Whether if you're an IFA, we can help your client keep their liquidity and protect their assets under management whilst also funding the Bank of Dad. So we're doing that distribution angle. We're talking to some of the big IFA networks, but also mortgage brokers. Many mortgage brokers don't want to touch joint borrower products, and they prefer just to share them over. And we have a really generous revenue share scheme. So we've got a referral program with quite a lot of the big mortgage networks where they will send them over. So that's that one. And then the third kind of key area is around house builders. So clearly, June is when the Help to Buy stops. They're starting to get a bit worried. So we've had some really interesting conversations with the house builders around, how can we become a one-stop shop for all these alternative products to help fund, people onto the property ladder. So that's the kind of the distribution. We've got loads more work we're going to do on our platform and on our technology, creating the kind of steps towards this broader kind of family private bank. And we will also be launching later on in the year another lending area. So another area of consumer lending. So mortgages was always our first one. But we're looking at another one which we'll be launching later down the year. So we kind of need to decide exactly which one. We've got two in the running, and we need to decide which way we're going to go with that.
Sounds like you've got a very busy year ahead.
Busy year ahead, yeah.
Brilliant. It's been fascinating to find out more about the product today. So thank you very much for joining us, and thank you to our audience for listening.